There are other companies whose financials weren't looking that hot, and now their financials are looking great, and in some cases even better than ever. And those stocks I added on to today. Hi guys, it's Stock Curry, and as the stock market gets out of this flat trading cycle it's been in and starts to move once again, it's time to buy some stocks. So I'm giving you the 5 best stocks to buy now, as well as 2 to sell. So let's get into it. I'm going to give you the 5 best stocks to buy now, and I wanted to let you know I put my money where my mouth is. All 5 of these stocks are stocks that I bought on Friday in my Millionaire Club portfolio. Now, if you're not familiar with the Millionaire Club portfolio, this is a portfolio we started last year, and we are buying value stocks. What we're doing is we're adding $250 every other week or $125 per week, whatever is easiest for you. And this is going to max out a Roth IRA. And we are using this money to buy value stocks. The exact same method that Warren Buffett used to become a billionaire in the stock market, but we're just going to try to become millionaires. And based upon the math of what Warren Buffett was able to accomplish in his first 10 to 15 years, we should become millionaires within the next 10 to 15 years, following the same strategy that Warren Buffett used. So I'm going to give you the 5 best value stocks to buy now. And also, there were 2 stocks that I sold today, and I'm going to explain why I sold them as well. So let's go over the Millionaire Club portfolio. We'll go over the trades, and then I'm going to get into detail and explain why I bought and sold each stock. After closing out 2 positions, we now have 20 stocks in the Millionaire Club portfolio. And the portfolio is currently up a little bit. It's hovering really close to flat. It's up a little less than 1% on the year. And I had mentioned earlier how as the small cap Russell gets beat down, that this portfolio might turn negative temporarily until we hit a bottom in the market, and then we should start rising once again. Now, of course, the purpose of this portfolio is not to try to time the market. We're not doing any technical analysis. All we're doing is finding undervalued stocks and then buying them in the hopes that they get up to fair value at some point in the future. Now, in doing so, we have a couple of rules. And those rules are that the companies have to be profitable. They have to have 4 quarters in a row of profits. Their balance sheets have to be strong. They have to have more cash on hand than they have current liabilities. And they have to have positive cash flow. And so we look at all of those things. Now, as earnings come out, we have to go and we have to look at the stocks and see how they reported earnings and see if anything changed. Because certainly a profitable company could become unprofitable. Now, just because a company becomes unprofitable for 1 quarter doesn't mean we're automatically going to sell that stock and get rid of it. What it does mean is we're going to have to pay really close attention to it and make a decision. Do we sell it now, or do we wait and see if the things will turn around and get better? And so what I want to do is go through some of the stocks that were not profitable, and I want to kind of explain why I sold some and why I kept some. Now, there were 2 stocks I sold today, and I'm going to get into the reasons why I sold them in a bit, but I want to talk about the stocks that I actually held. And some of those include BHF, Brighthouse Financial. Another one is GT, Goodyear Tire. And these are 2 stocks that have actually had a negative quarter on the last time they reported. But I decided to hold them because I felt like the downturn was temporary and that they could recover and get better. And in some cases, they did. And I actually bought more today. In other cases, I'm waiting for earnings to come out, which should happen in the next week or 2, and then I'll make a decision. If we end up with 2 quarters in a row that were negative, we'll go ahead and get rid of those and move the money into some more stable companies. So let's talk about the actual stocks that I bought and sold on Friday. And LBTYA and ASTL are the two positions that I closed completely. We'll go into more detail why in just a minute. The ones that we added onto include 10 shares of FINV, FinVolution at $4.02, about 3 shares of WBA, Walgreens Boots Alliance at $35.19, about 2 shares of ALLY, Ally Financial, at $26.33, about 2 shares of Citigroup at $47.20, and about 4 shares of ZIM Integrated Shipping at $16.92. By the way, if you want to know everything I buy and sell while the market is still open so that you can join us in these trades, you can follow me on Twitter where I post all these trades free of charge within minutes of making the trades. You can follow me on Twitter at twitter.com/RealScottCurry. That's twitter.com/RealScottCurry. All right, now let's get into the individual stocks that I bought and sold today and explain why I took these actions and why the 5 stocks I bought today are the 5 best stocks to buy now. The first stock that I sold today was LBTYA. And the reason I sold it had to do with their most recent earnings. Now, I had originally bought this stock in November last year, and then they reported their Q4 earnings in January of this year. Unfortunately, I forgot to look at their earnings. I would have sold the stock about 3 months ago. But when I did go in and look at the earnings today, I realized that I just can't hold this stock any longer. After being profitable for 4 quarters in a row and having an amazing Q3 earnings, unfortunately, they had a massive loss in Q4 that nearly wiped out all of the profits from the entire year. It was an absolute disaster of a quarter. And in trying to decide whether to wait for them to report earnings this quarter or to just sell the stock and get rid of it, what ultimately made the decision for me is the fact that LBTYA is not a US company. And I don't really have a lot of insight or knowledge into this company. This is a company that I don't understand that well. I really just bought it because of the fundamentals. And so when the fundamentals changed and they had a horrible quarter last quarter, I said, you know what? I'm not going to wait because I don't understand the company that well. Now, there were other companies I looked at that also had horrible quarters last quarter that I decided to hold on to because I understand the business model. One of those, Goodyear Tire and Company, another one, BHF. And both of those companies I decided to hold. They're both US companies. I can research them. I understand them. And that's why I decided to hold those companies, but sell LBTYA. I don't want to hold a company that I don't understand. And this is really important for you to understand. When you're buying a stock just because you think it's going to go up, that adds a lot of risk when you don't understand the underlying business model of the stock. So that's why I decided to sell LBTYA, because I didn't want to take on that risk. Luckily, we were able to sell this one for a profit, and we made about a 10% profit on this stock. The second stock that I sold on Friday was ASTL. This is Algoma Still. Now, Algoma still has a very low PE ratio. In fact, it's below 2. So why would I sell this stock when the PE ratio is so low? Well, the reason has to do with the fundamentals. And it wasn't just a bad quarter. Let me explain what's going on with ASTL and see if you agree with the sale of this stock. After having 4 quarters in a row of positive growth, last quarter, ASTL reported a loss of 64 cents. Now, that alone would not have been enough for me to sell the stock. But whenever a company has a loss, I want to dig a little bit deeper to see if the other financials are still strong or not. And when I took a look at the cash flow statement, I realized that they had free cash flow of negative $214 million on the quarter. And this is the second quarter in a row of negative free cash flow. Now, $214 million is a lot. And if their burn rate is $214 million, The last thing I need to look at is their balance sheet to see how much cash they have on hand to see if they're going to be able to sustain multiple quarters of losses and get through this downtime before they can turn things around again. And when I took a look at the balance sheet, I noticed that they have $244 million in cash and cash equivalents, which is down from the $464 million that they had the quarter prior. And that makes sense given their $241 million negative free cash flow. Then I took a look at their accounts receivable, combined those together, got a total, and then subtracted out their current liabilities. And even though they still have more cash on hand than they do liabilities, the positive difference was only $60 million. So they went from about $300 million in additional cash on hand to only $60 million in additional cash on hand. And what that means is next quarter, if they have another loss in free cash flow of more than $60 million, they're going to be bankrupt. And they are going to have to do a share offering, or they're going to have to issue bonds at very high interest rates. And either one of those is either going to dilute shareholder value or significantly decrease shareholder value. And in both scenarios, we're looking at a pretty significant drop in the share price once they do that. So it was for that reason that I felt like I could no longer hold on to the stock and I had to sell. Now, the benefit of buying these extremely undervalued value stocks is sometimes, even when you get these horrible quarters, they're kind of already priced in the stock and you can still make a profit even after a bad quarter. And luckily, that's what happened. We were able to eke out a little 2% profit on this guy. But man, we cut that close. So you've really got to watch these companies and be very, very careful about what they report, because you don't want to be in a situation where you're holding what was a great stock and now it's a zombie stock. And this incredible company with all this growth and everything was looking rosy, suddenly everything looks horrible and they're about to go out of business, because companies literally can change that fast. And that's exactly what we saw happen with that stock. So I had to get rid of it. I don't want to hold bad stocks in this portfolio. The entire goal of the portfolio is to make money, not lose money. So sometimes you've just got to change up what you're holding, get rid of companies that no longer have great financials. So that's why I sold those two stocks. Now, at the same time, there are other companies whose financials weren't looking that hot, and now their financials are looking great, and in some cases, even better than ever. And those stocks I added on to today. So I am very excited to talk about the 5 best stocks to buy now. Let's get into them. And the first of the 5 best stocks to buy now is FINV, FinVolution. Now, FinVolution recently reported earnings, and while it doesn't show up on their normal earnings, there is one data line that is in Webull that's not in Moomoo that gave me a lot of hope for the stock and caused me to buy more shares on Friday. If you go to Webull and you look at the income statement on Webull, you'll notice that they reported a diluted EPS, including extraordinary items, of 39 cents per share, which was down a little bit from the prior 2 quarters and down about 11% on the year. I don't really like the fact the company's declining, but it's not horrible. At least they're still profitable. But what got me to buy more shares today, especially ahead of earnings, was the diluted normalized EPS. And diluted normalized EPS is not something that is reported in Moomoo, but it is reported in Webull. And what diluted normalized EPS is this is essentially the earnings per share just from their normal operations. This excludes anything extra like investments or side businesses, just their normal operations. That's what this earnings per share is. And what you will notice on the normalized EPS is a consistent increase quarter over quarter over quarter, from 74 cents to 84 cents to 88 cents to now 93 cents. And what that tells me is that this company, their normal operations, what they get most of their income from, is actually growing, expanding, and becoming more profitable. And that was a huge green flag for me, and the single reason why I bought FINV on Friday. And it is also why FINV is one of the 5 best stocks to buy now. The next best stock to buy now is WBA, which is Walgreens Boots Alliance. And this is another stock that I dollar cost averaged into. Now, if you take a look at the PE on WBA, it's reported as a loss. And that's because they had an annual loss on the stock. Now, you might recall how a few months ago, we noticed that WBA had a significant loss last quarter. And this was major concern. But it was a loss due to a one-off item, due to a lawsuit. And I felt like even though they had a really big loss, that they would be able to turn things around and become profitable. And they just reported earnings. And their Q2 earnings showed that they did, in fact, turn things around, and they reported an 81-cent earnings per share. So this is really good news because it means Walgreens has been able to maintain profitability, and it really was just one bad quarter that we should be able to ignore as they now move on to profitability. Next quarter, that PE ratio that is currently a loss should go away. It should become a profit, and we should finally have an actual PE ratio in WBA. And excluding that one-off, the PE ratio on WBA is currently sitting at around 6.5. Depending upon the way you calculate it, it can be calculated slightly different ways, but it's somewhere between a 6.3 and a 6.8. Now, that is actually a little bit higher from where we bought in previously. Walgreens price has actually gone up. So I dollar cost averaged up on WBA. And I think this is a great buy. I think as they continue to have profitable quarters over the next year, 2 years, 3 years, that this stock is really going to rise in value. And that's why WBA is one of the 5 best stocks to buy now. And the third best stock to buy now is ALLY. This is Ally Financial. And Ally Financial also has a pretty decent PE ratio at 6.38. But what really got me to buy in more was the most recent earnings. You see, after a lot of the regional banks collapsed, there was a lot of concern about how certain banks, especially regional banks, would be holding up during this time of the banking crisis. And we were really going into the dark going into this earnings season. We had no idea how banks were actually doing. So we were really excited to look at the banking sector. And I didn't really want to buy any banks until we got earnings. Now that we did, I decided to buy ALLY, and here's why. In their most recent earnings, ALLY reported a 96-cent earnings per share. And this is really phenomenal, even though it's down 48% year over year. I want you to compare the previous 2 quarters because it is up 83 cents from the prior quarter and up from 88 cents the quarter before that. So 96 cents earnings per share, it's showing an increase quarter over quarter. And that is exactly what I like to see. It tells me that ALLY is increasing profits after the big downturn they had. And this should be a great stock for the future. And that is why ALLY is one of the 5 best stocks to buy now. And the 4th best stock to buy now is another bank. And that bank is Citigroup. Citigroup has a similar PE ratio to ALLY at 6.58. And that PE ratio, just like ALLY's, is significantly undervalued. But what really got me excited about Citigroup was their most recent earnings. Not only did Citigroup show a increase quarter over quarter, just like ALLY did, Citigroup actually showed an increase year over year with an 8% year over year increase in earnings per share and their best quarter in a year. This was absolutely phenomenal for Citigroup. I would say Citigroup is an even better buy than ALLY is. Regardless, Citigroup is one of the 5 best stocks to buy now. And the last of the 5 best stocks to buy now is ZIM. This is ZIM Integrated Shipping. Now, the stock price itself isn't really rising that much. In fact, it's on a very slow rise over the past year. But where ZIM really shines is in the dividend yield. You're not reading this wrong. This is the actual dividend yield on ZIM, 162%. I'm not kidding. That is the literal dividend yield on ZIM. And if you take a look at the PE ratio, it is 0.44. But wait, we have to look at the PB ratio on ZIM. That's the price to book ratio to get the actual value. Anything less than 1, and you're able to buy the company for less than the value of the assets. And ZIM has a PB ratio of 0.35, meaning this stock would have to triple in value just to get back up to fair value. With a 162% dividend yield and the stock being 65% undervalued, meaning it would have to 3x just to get back up to fair value, ZIM is easily one of the 5 best stocks to buy now. Now, if you want to join us in the Millionaire Club portfolio, I'm going to give you some resources to get you started, as well as some free stocks. But first, I just want to remind you guys that nothing I talked about today is financial advice. Nothing I talked about is a recommendation to go buy, sell, or hold any asset. These are just my opinions, and I'm just showing you what I am personally doing. Now, I could be wrong. I could be crazy. You please go do your own research before investing in any of these stocks. Now, if you want to get started with us and you want to get some free stocks to help you out, I recommend you go check out my platforms page where I have a number of online brokers that work in countries all over the world. Go check out the platforms page. You can get up to 15 free stocks when you open an account and deposit $100 or more. This is a great way to get you started and kickstart your portfolio in making profits. I've got links over there for Webull, Moomoo, and others. Go check it out at stockcurry.vip/platforms. That's stockcurry.vip/platforms. If you got a lot out of this video, then be a good friend and share this video with your friends and family so that they will know what stocks to buy as well. And share this video on your social media pages so that you can help other people buy great stocks and make money with us. And don't forget to hit the like button and subscribe. And if you missed the stocks that we bought 2 weeks ago, make sure you watch the last Millionaire Club update that I posted here.